What's up, guys? Welcome back to Everyday Money. I've sort of been putting this one off because just like world events could get in the way, and you guys requested, and I said that I was going to do it. So today, what I want to talk with you guys about is how you can use gift equity in order to purchase your parents' home for essentially 0% down, still have 80% loan to value on the loan, not have to pay PMI or anything like that, and be able to just use conventional financing, not like rural or USDA or VA financing. And I know that you guys are probably like, that's not possible. You always have to put 20% down, or else you'll have to have PMI, you have to have this large down payment. And the thing is about buying your parents' home is you can do this. They can gift you equity in order to make that 20% down and really help you out. And that's just one of the very first benefits of this. There are a lot of great reasons why you may want to purchase your parents' home and why your parents may want to sell their home because, you know, as folks have families and they grow their family, they end up buying these usually pretty large homes over the course of time, and they might have a 4 or 5 or 6 bedroom home with dining rooms and large garages and large yards for kids to play in. And over time, people may want to downsize. They may not want to deal with that much maintenance, deal with paying for all of those things that heat that big of a space, and so they may want to sell their home. But this is a home that they have raised their family in, raised kids, had grandkids, perhaps come home to these places, and so they have a certain sentimental value to it. And at the same time, you have grown up in these places, you've played with your friends, you know the neighbors, you know the neighborhood very well, and you may have a sentimental attachment to this home. And so you can make this a win-win for both of you all and make it a financial win for you, because you may be able to skip a bunch of the things that cost a lot of money in purchasing a home. Some of those are inspection costs, realtor costs, again, the down payment costs. A lot of these things you may be able to skip. And the thing is that you don't necessarily need a realtor for this. You can if you want, but I'm going to tell you guys how to do it without a realtor. Skipping the inspection, that is something that I would only recommend if you have a very intimate knowledge of homes. But you can do that, and you can save that $400 or $500 or $600 depending on where you are in the country. But my biggest warning on this is that if you are not very intimately have knowledge of building construction, of the history of this home, of the roof, the HVAC, the plumbing system, the electrical system, the foundation, just the everyday interior of the home, I would recommend hiring an inspector, especially if your family also does not have a very good idea about building construction. Maybe they just own the home, they hire out maintenance, and they don't know if the water heater is 5 or 20 years old. They don't know what the HVAC is, and they don't know when the last time the roof was put on. So let's get into how the actual nuts and bolts of how you guys can purchase your parents' home for essentially 0% down. And hit that like button for me, and we're going to get right into it. So the first thing that they need to do is obviously come up with a purchase price, what they want for the home. And that can vary because a lot of times when you're selling to family, and especially your kids, they may not necessarily want to get full asking prices they could on the retail market. That's just something the parents occasionally do for their children. They're usually pretty generous to their kids, so they need to come up with whatever the price is. The best thing is that you're not going to have to use a real estate agent in this transaction. It's very easy not to. And so you can take, even at market level prices, you can take 6% off of that, which ends up being quite a bit of money if you're starting to get up in the 3, 4, 5, 6 or more $100,000 range. And so even at market prices minus 6%, you can still have a pretty significant savings there. Once you get that amount that they want to get from that home, you just simply add on 20%. That gets you the 20% down that you're going to have is a spread between the purchase price and what they end up paying for it. That is going to be the amount that they end up gifting to you, even though no money actually transfers hands. That gift of equity will be your essentially 20% down. Now, I have done this personally. I typically don't do things on this channel that I have not personally done before. And when we purchased our house from our in-laws in 2018, and this is before housing went absolutely insane, and this house actually needed quite a bit of work, and I knew about that, and I'm good with houses, so I knew exactly what needed to be done. Their purchase price was $175,000, and so we made the contract price $219,000, and they were going to gift us that 20% in equity. Now, all you have to do here is get a generic purchase contract. You can search your state and a search, for example, Ohio real estate purchase contract. And there's probably some sort of boilerplate purchase contract out there that you can download. That was the way it was for our state. And you just plug in the numbers. You say, this is the purchase price. This is the loan to value that they're looking for. This is, the percentage rate. If you want an inspection period, if you want a home warranty, any of that stuff that you would put in anything with a realtor, you just put that in your boilerplate purchase contract. This is where if you were dealing with somebody else, a non-family seller, where you may want to have a real estate agent involved because, if there's errors and such, there could be litigation that could cause a very big problem. And not only are they professionals in those areas, but they usually also carry error and omission insurance. And so that is taken care of. But if you guys make a small mistake on this contract and it's between you and your parents or your in-laws, I would hope that if you're going into this type of sale anyway, that you guys have a pretty good relationship and that you could work it out without going to court. But just take that in mind when you guys are doing this. This is a legal binding contract between two parties, and so try to get it exactly right. When you're looking at this and you're saying, well, isn't that kind of a scammy or whatever, just adding 20% to the purchase price and then them gifting you it back? It's not, because the property still has to appraise at that purchase price level in order for the bank to loan you the money. So, if you say XYZ number and it's way outside of what the market will bear, what it will appraise for, then they are going to say that is not going to be acceptable, and you'll just have to kind of go back to square one and redo this all. From a tax point of view, because everyone knows that when you transfer money between people, there is always some sort of tax. The IRS is keeping track of this, and this is one of those areas where you can avoid tax. Now, when you're looking at gift tax, people can gift folks a certain amount of money before they even have to report it on their taxes. And in 2022, this amount is $16,000 per person. And the way that you can work this is if the people that you're buying from are still married, and you and your wife, you and your girlfriend, or is the kind of the best way to do this with two people involved, is that they can donate $16,000 from each of them to each of you. So before they even would have to list it on a tax form for gift tax, they could give you $64,000 in equity without ever having to require putting it down on a tax form. They can even go over that, and if you need to gift $100,000 or $200,000 to make this work, that's not even a big deal. They will still not be taxed on that gift. You will not be taxed on that gift. It only requires filling out a gift tax form so that the IRS can keep track of that, so that you don't go over your lifetime gift amount in 2022 is just over $12 million. And so you guys can see that this is a way to prevent people that are ultra wealthy, such as the Warren Buffetts or the Elon Musk, from being able to gift their descendants or gift other people enormous amounts of funds without the IRS being involved and taking their little piece of that. Now, what you guys are going to end up with here is a property that you can purchase with 80% loan to value, conventional financing, and no PMI, very favorable interest rates. And if you guys can't, if you take this to your bank and they say that we can't do this, this is out of the ordinary, and your major banks may not be able to or may not want to do this type of loan for you, may not want to work in this type of situation, because all they want to do is cram through as many of the typical purchase mortgages as they can to get their fees and be on with it. Look for a small community bank that will help you out with this, some sort of trust bank or something like that, that only has a few branches, isn't nationwide, that will look at you on an individual basis and be able to do this for you. Now, you're going to have that money left over, and there's a bunch of things that you can do with it. Some of the biggest things that I always like to tell people is leave it for your reserves, especially if you're a first-time home buyer. There are costs that are going to come up with owning a home, even if you are good with homes. If you had it inspected, something is going to come up that you're going to need a lot of money in a relatively short period of time. And if you had zero money, then you're looking to put it on a credit card or being in a really bad place as far as not being able to get something fixed or asking for a loan or something. So have some reserves, have an emergency fund. You can use it to pay off debt. You can use it to make needed purchases. If you just bought this as your first home and you need to buy a couch and you need to buy a real bed or a kitchen table, you can use it for that. My number one thing to do with any of this money that you guys saved from not having to put down that 20% down or 3.5% down is invest that money so it grows for your future, so that it can potentially be a nest egg for you when you're ready to retire, or money to invest in other things such as investment real estate, Airbnbs, things that can really grow your wealth and get you ahead in life. So guys, I hope you liked this video. I hope you guys got something out of this as far as being able to purchase your parents' home for essentially 0% down, which is a pretty awesome thing if you can, use the tools at your disposal to get that done. If you guys haven't subscribed yet, subscribe down below, hit the notification bell. Smash that like button for me for the YouTube algorithm. That really helps out. I appreciate you guys watching today, and I'll see you in the next one.